Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to some of the upcoming earnings for the week ahead, for the week starting Monday, the 19th of February. Certainly, we've passed through another week where we saw, by and large, outperformance in terms of earnings. We've seen strength in terms of the numbers from the likes of Coca-Cola, Cisco Systems, Deere & Company, Shopify, Airbnb falling short on that EPS number. But by and large, an interesting part of it is that we haven't necessarily always seen that result in great upside for those stocks, something I alluded to at the beginning of earnings season that we saw last time around, last quarter. We saw those outperforming estimates, not necessarily gaining all that much. But what we saw in the flip side of it was when a company underperformed, that's when we saw the big moves, and we saw those moves coming towards the downside. Bear in mind, people continue to really attach significant focus on the outlook as much as anything. So you can beat on revenues, can beat on earnings, but if you don't necessarily think you're going to have a great year, markets will reflect that in terms of their pricing. Let's look at how things stand so far in terms of earnings season. This is the current state of play. 76% of the S&P 500 have reported. Once again, it's all about earnings. We have seen outperformance across the board, generally in terms of earnings, and a lot more changeable when it comes to revenues. In particular, we're seeing weakness on the utilities and the energy side of things. Then certainly not necessarily looking great on the consumer non-cyclicals as well. But certainly that's one area to focus on, because by and large, the earnings, it feels like these companies are managing to guide markets in the right direction that sets them up for them to be able to outperform. But that's not necessarily being the case in terms of revenues. And that will be something that we'll be considering as we move forward into the new week. Talking of which, let me just show you exactly where we stand in terms of what to look out for this week. Really, we're being top and tailed with quiet days on Monday and Friday. It's often the case. But we're seeing a big focus, particularly on Tuesday, on the US consumer with the likes of Walmart and Home Depot coming up. Synopsys and Nvidia on Wednesday. Nvidia, I think, is by and large going to be the big report of the week. Of course, that tech train just keeps on chugging. And as long as it can continue to do that, then hopefully equity markets can continue to reach record highs. Nvidia, a key part of that. And we saw them overtake Amazon in terms of their market cap recently. So this company's just going from strength to strength. And then on Thursday, we do have a few names, Booking Holdings in particular, an interesting Intuit, EOG Resources and alike. But really, it feels like the big focus is going to be on what's happening on both Tuesday in terms of Walmart and Home Depot, and then that big Nvidia release on Wednesday. So let's start off with Walmart. Let me just put this on a full screen, get rid of my head, and we can see exactly how things are shaping up. You can see here it's Tuesday, the pre-market that we're expecting to see this reported. In terms of the numbers, we're looking for 164 on the EPS number. That's higher than the third quarter, but lower than the 171 that we've seen last time around. In terms of the company's ability to beat or failure to beat market expectations, we have seen the last 6 occasions represent outperformance on the earnings side of things for Walmart. So certainly it's been looking relatively good. And excuse the risk warning at the bottom, but all of the examples at the bottom of this chart have seen outperformance. So that is the last 8 occasions that we can see on this chart. We've seen outperformance in terms of revenues. In terms of what we're looking for, it's 170.78 on the revenues. That's significantly higher than both last quarter and last year. And this feels like a play on essentially the US consumer. Are we going to continue to see strength in terms of US consumption levels? And ultimately, if you look at, say, retail sales from an absolute perspective, that tracks the price of the Walmart share price very well. So really, this is a play on exactly that. Are we going to continue to see the US consumers spend? And markets, by and large, believe the answer is yes. The long-term trend is upwards, and that generally is the case for retail sales. We see the value of retail sales typically increasing year on year, and this huge giant of a company really typically goes alongside those trends. So we're expecting to see that relationship really continue apace. And if you're looking for something within your portfolio, or looking for something to trade around the idea that we're going to continue to see strong retail sales and US consumption, Walmart looks to be a really interesting stock to watch. In terms of where we stand, we've seen a rally back up into that prior high recently, but starting to falter somewhat. The daily time frame, as we can see here, showing a little bit of weakness as we move in towards the back end of this week and head towards the new week, where we, of course, will see these earnings on Tuesday. So not long left until we see these earnings come out. If we do see some weakness, by and large, that just looks like part of a wider trend. And I think, if you're talking about stocks where people buy the dip, this is the kind of stock, quite frankly, because the weakness, the periods of weakness generally don't necessarily last that long. And the trend is very clearly defined towards the upside. So near-term weakness, I think people would just perceive as a potential buying opportunity. And in terms of from a short-term perspective, well, we've got this sort of potential near-term topping pattern because we've seen a breakdown through your swing low at 168.90. But any near-term downside, I think, would be likely to be short-term in nature, and therefore we'll be looking for potential fib levels for this market to move back down into. But that is only if we see that sell-off. And look, we're looking at a stock that is highly trending from a long-term perspective, and therefore people are very confident that we will ultimately see it resolve in the direction of the trend, which is towards the upside. So near-term downside, I think, would be fleeting, but that's if we see that come to fruition. If we don't, a rally up through the prior high, which is now 171, and we can just see the market ticking open. That rally up through 171 would give us a fresh signal, a fresh bullish continuation signal, and at which point we'll be able to look at these recent lows around 167.5 as a potential area where we would need to break back through to negate the bullish breakout that would have taken place. So look out for either a pullback and a fib retracement, or a break up through resistance, and in which case we'll be looking at this recent pullback as just another swing low, as we have seen in the past. Next, I wanted to highlight Home Depot. We can see Home Depot in terms of the sort of trend in terms of outperformance or underperformance from market expectations. It has been very consistent in terms of the earnings side of things. You can see outperformance against market expectations on the past 8 occasions, somewhat less so on the revenue side of things. You can see Q4 of 2022 and Q1 of 2023 underperformed expectations. Whilst we also see this stock from the view of consumption and retail sales and the like, much like with Walmart, this also has a sort of home improvement construction element to it, which is not necessarily as convincing. So really, we're going to be looking out for not only the earnings and revenues and like, how are they faring at this time when we're seeing a bit of tightness in the housing market because of those higher interest rates, but also the outlook going forward. Are we seeing a pickup? Are we seeing people growing in confidence? Because we are now moving into a period of time where the expectation for lower interest rates also has been driving down actual interest rates provided for mortgages. And therefore, that provides a little bit of respite for the housing market and emboldens people a bit more to potentially spend more money doing up their home because they think they might be able to sell it down the line or alike. And so Home Depot is going to be another really interesting one due out on Tuesday alongside those Walmart earnings, because we've got it pre-market. And in terms of the share price, let's just grab that for you. Like I said, a bit more changeable, but the long-term trend, I'm just going to bring it to you on a monthly time frame. The long-term trend, again, is very impressive. Still some way away from the prior high that we have here at 420. Let me just show you exactly that distance. So we're looking at a 16 to 17% gain to get back up to that prior high. On the bottom end of this trend, we did keep pulling back into these deep retracements, but by and large, maintaining that uptrend through the creation of higher lows, albeit with sort of mixed and jumbled up top end of that trend. But nonetheless, more recently, we've rallied up through that area of resistance, and it feels like we've escaped that consolidation. And hopefully we're heading in the direction of those prior highs as we look to continue that wider uptrend. Also on the daily time frame, we can see exactly what we're talking about on the wider time frame, but playing out over the shorter, because we have got this creation of higher highs and higher lows. And so this near-term trajectory points towards the pullback seen coming into this week as, wait, let me just grab this fib from here. So we're then looking at this as a likely fib retracement. Just grab it there you go. And absolutely perfectly, we've tagged the 76.4 fib on 2 occasions, and now we're starting to regain ground from here. So if we break the 350 mark, then yes, it looks like we're going to roll into a wider pullback. But as things stand, you're looking at a potential 50% bet, essentially, that we head up and break it through your 368 versus breaking down the 350. And given the uptrend that's in play, I would say that the trend would signal a greater likeliness of us breaking up through resistance than breaking back down through support. Of course, the earnings have the propensity to move things in a volatile manner and could see us take out that support level. But certainly as things stand, we're in that sort of recovery phase following this pullback and this sort of basing pattern. So unless we break out down through these key support levels, I think this recent rebound looks like it could have legs, and hopefully the earnings data will come out with something similar and provide the basis for that move back up into that prior high of 420 for Home Depot. But like I said, really the key here is, can we maintain price action above 350? If we can, then things look relatively constructive for this company. In the red thus far for this week, but we saw that last time around, and it ultimately provided us with a pullback from which we essentially saw the stock project back up into a new long-term high. So the pullback we're seeing coming into this earnings week could quite easily be a very similar story. And finally, last but not least, we want to talk about Nvidia. Of course, Nvidia, the darling of the AI revolution, so to speak. We have been looking for a number of different signals over how things might shape up for Nvidia. We've seen a number of different companies reporting thus far, the likes of ASML, the likes of AMD, Qualcomm, ARM, and pretty much all of them have beat on both earnings and revenue estimates. So by and large, the chip makers do look like they're faring well, and that would point towards something similar for Nvidia. Now, the thing is that we've seen such a massive run up in terms of the share price that people are thinking, you know, how much good news do we need to actually justify where we are at the moment? Markets are expecting 457. That's significantly higher from the 402 seen last time around. And if you look at where we are just a year ago, so this is Q4, we look at last time, 0.88. We're at 457 expected this time. So yes, this stock has been ramping up, but so has the earnings. It's been a massive expansion phase for this company. In terms of revenues, 20.27 expected. You look back at this time last year, 605. So certainly this company is growing at a rapid clip, and it feels like Nvidia are perfectly positioned to really find themselves at the forefront and in the middle of this clamor for AI, where it does feel like businesses that aren't investing in AI are going to get left behind. So it's almost like everyone's getting into it. Whether they actually find that expenditure to be something that they will benefit from down the line, or whether they don't, that remains to be seen. But really, I think that's going to be a story down the line. At the moment, the story is which companies are going to take advantage of developing it and selling the chips and the technology. But down the line, I think it's going to be about which companies utilize it best, aside from the tech industry, to be able to create efficiencies and up their profitability. That will be the story down the line. But for the time being, it's all about the chip makers, and Nvidia will be the big ticket item of the week. In terms of the share price, well, look, it goes up, and that has been great for shareholders thus far. Certainly, you might be thinking around this period of consolidation that, you know, maybe this run-up's sort of overdone, but that breakup through resistance that we saw has really seen the stock just take off once again. Once we broke through that sort of $5 mark, really pushing sharply higher up, now into 733. So I think, look, around this report, we're likely to see significant volatility. Near-term price action is going to be determined by whether this sort of short-term intraday trend can be maintained. You can see here the clear sort of stepped move higher for this stock means that 695, 696 is the key level to be looking out for. As long as we remain above that level, then the trend is your friend and it remains intact. But if we break the 656 mark, that's when we look for potential wider retracement to come into play. But generally, sort of dips and pullbacks have been very short-lived for this stock. So look out for Nvidia. Of course, it's all about earnings. It's all about revenues. Are they actually continuing to really snowball? But also, what's the outlook? How's the demand looking? You know, are they finding that demand is outstripping their ability to create and manufacture at the moment, and they're not able to take advantage of it? Are they finding that they're able to up their margins because of the fact that they're seeing such high demand and there's a clamor for their products? Certainly, I think in terms of the outlook for the stock, this is going to be the big ticket item. And it's interesting that it always comes relatively late within earnings season because, quite frankly, this could be up there with all the big tech names earlier in the season because of what a big determinant it is in terms of market sentiment around the tech industry. So Nvidia may be relatively late, but this is going to be a really big one for the markets as we hopefully maintain the bullish momentum that has been in play, driven by a large part by the tech sector and the clamor for those oversized AI gains.